Good morning and welcome to the Short Vol Show Live. My name is David Lincoln, broadcasting live to you from beautiful Cape Cod, Massachusetts, home of the Pilgrims. And we have a slight down NASDAQ as we come into the day today with not a whole lot going on. It's interesting to note that coming up into the election, there's different ways to play things, but I think it's fairly safe to say that the president won't be dropping bombs on Twitter, like, announcing a tariff on China or something like that to disrupt the market. So it's in the administration's best interest that the market continues to kind of do not that much at least to the downside in the next couple months. So I've decided to just selectively sell a small amount of premium here. Things hadn't been going so well with the position, so I figured let's go back to trading small with just selling some very small strangles a couple weeks out in one or two issues. I did do that actually in Lulu, which for some reason I seem to have a affinity for Lulu lately, but let me pull that up for you and we can take a look here as our Thinkorswim is back in action, which is nice. But yeah, Lulu, I sold a very small amount of premium. I sold in 16 days out. I sold 2 of the SEP 315 puts and 1 of the SEP 400 calls. So, and because I'm so skittish lately, I actually bought a couple. I bought a two front week put spreads, which I ended up paying a total of less than $20 for a total, plus one other put, which I bought. So if, the inevitable down move were to happen, I'm protected to the downside there. So, yeah, I don't know if did you folks get to watch any of the Democratic National Convention? I can't, as much as I loathe the president at times, he is more interesting to watch than this virtual convention. I couldn't bring myself to watch more than about 30 seconds of it before I just kind of fell asleep from boredom. I think most people are just waiting for the newsreel the next day to see the highlights, but it's a real snooze fest as far as I'm concerned, watching that convention thing. But yeah, I would suspect that although the term structure has the futures very high up, I don't expect a whole lot of turbulence in the next at least couple weeks in the market. So not a bad time to selectively either be short some VIX or a little bit of premium here and there. Let's take a look at the term structure real quick. I apologize for the short notice coming on here, but let's take a look at the term structure here. Let me get out of the way. And as expiration occurs here, you can see that the August has rolled off and we're now into the next month. And you see this huge spread here. It's just a penny under 4 points between September futures and spot. And that is one of the biggest spreads we have ever seen. I feel I can safely say that between the front month future and spot, and these two have to converge. So something's got to happen here. Either we have to have a volatility event, or the futures have to move lower. Thus, meaning UVXY, VXX need to move lower. So I think that this is a something's got to give here real quick. And the most likely thing to give is that these VIX ETPs move lower. Once again, this 4 points here is just an enormous amount of space between the future and spot price. Now, these two don't really, quote unquote, need to converge until expiration, which is we're as far away from expiration as anyone could possibly be. Here it says here, as I highlight over the future, it says 27 days till expiration. That being said, this is still a huge distance. We had talks before about how the average. We had a debate about the average of a future being apart from spot right after expiration being around $2.50. And my side of that argument, this was a couple years ago, my side of that argument was $2.50 was too high for the average. So $4 is just a remarkable spread here. And, when you look at these VIX ETPs over the last little while, yes, they have come down a lot, but that doesn't negate the fact that this is just a huge spread here. And so thus there is a tremendous amount of pressure. Unless we have some huge market down move or a volatility move, there is tremendous pressure on these products to move lower, UVXY, VXX, etc. The VVIX has troublesome in a troublesome way has stayed quite high, above that 110 level. Now I don't consider levels significant in here as much as movement, but even with that being said, this staying this far above 100 for so long is significant to me. Now, a lot of the paper when I look at VVIX over the last year has been actually downside action. So this elevated VVIX might not necessarily mean that there's people buying out of the money calls in the VIX. It can also mean that people are buying puts down below in the VIX. And we also know that this trade has been on a lot lately where people sell those puts to sell those out of the money puts to buy out of the money calls. That has depressed the value of puts somewhat. But we've also just seen straight up put buyers in VVIX as people try to take advantage of just what we're talking about right now. The fact that the VIX has been over its average for quite some time. A couple years ago, seeing VIX over 20 would be a huge sale. I remember when a VIX of 14 was a huge sale, and we talked about the VIX staying around 12 80% of the time, and then you'd have a brief pop to 14 or something. Well, now the VIX has been above 20 for a quite long time, and something's got to give. Either the market's got to make a big move here, or the VIX has got to move lower, and it's going to happen sometime between now and after the election. So be prepared for some fireworks in these VIX products. And right now, the way things look right now, it just has to move lower. We're just not moving. Let's take a look at the SPX options prices for a second and see if we can dig in a little bit deeper into the situation here. So we know that the VIX is based on the SPX about 30 days out. So if we take a look at SPX options 30 days out, well, here's 29 days, right? 21, and we see as we move closer in time to that 30-day out level, we see these prices way lower than the 30-day. So, and that doesn't always happen. It sometimes happens, but that doesn't always happen. But usually when prices are this much lower out to the 30-day, that talks of pressure on the downside here for the VIX and for volatility of the SPX, those being one in the same. Look, if you go 9 days, 12 days out, we're down to 16, 13, 9. And, this stuff has not been moving around a lot. So there's pressure on the VIX to pull lower. Now, of course, the other way of interpreting the situation with the VIX higher like this is that somebody out there doesn't feel like, that there's nothing to worry about and everything's going to be fine. If everything was fine and dandy and, the scenario of, well, it's a V-shaped recovery, everything's great. The market's just beginning a new business cycle and we're going to just explode to the upside from here. Well, the VIX being 21.5 doesn't jive with that scenario. So something many people are concerned about the market here, thus the VIX still above 20. But this situation, once again, has to give. You can't have $4 between the front month future and spot for very long. Even the fact that we're an expiration cycle away from these two converging, it's still a massive number. And that combined with the fact that the VIX is, above its historical average for a very long time with the market at all-time highs means something's got to give. We either have to make a big move in the market or the VIX is going to come in a lot soon. So put that in your pipe and smoke it for a second. Think about it and try to figure out the way you want to position yourself. And, my idea would be to, any sort of a rise in the VIX would be a good opportunity to have some sort of short position on. And of course, you don't want to use all your bullets, but you could start to build something. And if it goes against, maybe add to it at better prices. But either that or you play for the fact that we're going to get a down move in the market. But it's a tough thing to time a down move in the market. Believe me, I've been trying to do it for the last couple months for some odd reason. But this thing with the VIX staying stubbornly above 20 with the market at all-time highs, we can legitimately say the market's at all-time highs now. Everything except I believe the Dow has taken out the highs. Once again, everything but the Dow. We can see, if I get out of the way, the Dow not quite there. Let's take a look at the Russell. The Russell not quite there either, but look at the NASDAQ, way above all-time highs. Look at the E-minis, just right on the edge there of taking out the highs, right? We're points away. Now, people have talked about volume. This seems to be a strategic point here. Volume hasn't been big the last little while. Now, some people have talked about the fact that TD Ameritrade was down for a couple days, pointing to why volume hasn't been so great. But either way we look at it here, this is a important point for the market. And so one of two things is going to happen. Either we're going to get a big move one way or the other, or volatility is going to come crashing in. And because we just can't sustain a VIX this high without A, the market moving, and B, the future. Not only is the VIX high at 21, but the futures are not 21. They're 4 points higher. So, not only can the market not sustain a 21 VIX, but it can less sustain a 24 future. And, when we move out in time, the next future, let's go back to our VIX Central one last time before I leave you here to get started in the market. Without stuff moving, it's kind of ridiculous that we have a VIX above 20 for so long. But even more ridiculous is, once again, the futures, which are 28, okay? October futures, 28. Now, the market has not been moving around even at a 20, so 28, something's got to give. Someone's holding on to that. Someone has bought this 28 and is holding on to this level, and it's either going to work for them or it's not. Whoever is long this stuff here, remember, when the VIX is high, it means somebody owns premium in the SPX, and it either works or it doesn't. If it doesn't work, then someone is bleeding every day. To use a unpleasant metaphor, blood is trickling down someone's leg slowly every day as the market does not move enough to sustain this 28 VIX, and something's got to give. And people are going to give up on owning this premium at some point if it doesn't pay for them because it's costing them a lot of money. Now, a VIX, futures this high, that represents a lot of money being hedged, being long this premium. And so either we need a move or it's going to come crashing in. I don't know how much more clearly I can say that to you, but that is where we are for sure. And, there's not many times stuff is ambiguous in the market and you can't tell what's going to happen moving forward. But this is a sure thing that things cannot stay like this. Let's see. Spencer says, Vol's been rapidly declining for a few weeks. If buyers had conviction everything was okay, then the VIX would be below 20. Yeah, I agree with you, Spencer. And that's kind of the dilemma we're in right now. Somebody with more money than you or I is betting that the market is going to move, and either they're wrong and the stuff gets completely collapses, or we get a move. It's one of the two. So what do you do in that situation? Do you play for the move or do you play for the collapse? That is a question you're going to have to answer for yourself. My play right now is very short term, play for the collapse, but very small and very short term, and be ready to switch it around and own premium, either buy options premium or buy some sort of VIX premium, or at least get out of the way for a move if it starts to happen. But either we're going to get a move one way or the other, or stuff is going to collapse real soon. And this 4 points, we won't even stay at 4 points between the future and spot for even a day, I would say. I mean, something will happen between now and the weekend to either these VIX products come in a bit, or some sort of up move in the VIX. It's just, it can't stay that wide. So there we are. Best of luck to you in your trading ideas. Once again, my play for the moment is to just sell a very small amount of premium, but to watch this stuff very closely and to have dry powder, because I'm ready for something to happen. Viviano Canto, can't get out of the way if TOS crashes again. Okay, so that's a very excellent point, Viviano, and thank you for bringing that up. Let's talk about that for a second. You should have a backup brokerage account, and you should be able to get money to it or have it funded already. Now, I know that can be hard if you don't have that much money working in the market, but in the absence of having a backup brokerage account, when we see this stuff going down, either for me right now, I've been able to get the web-based Thinkorswim up. So if worse comes to worse, I can execute on the web-based Thinkorswim. But if you don't have a plan in place that you're confident that you can execute in, then I would not have trades on, because like Viviano says in the chat here, you don't want to get stuck where all of a sudden your system doesn't work. Now, I know this sounds like a retail trader problem, but professional traders deal with this stuff a lot too. I remember trading in the bond pit, CBOT in the bond pit. I have a handheld terminal in my hands, and the battery goes out, something goes down. You're at the mercy of the markets all of a sudden. So you need to have either a plan in place if Thinkorswim goes down again, or I would not have the risk on. It's that simple. And if but it's a personal thing for you. If you don't have either an ability to execute or another brokerage account to go to, now obviously you need to have an additional X amount of money in an additional brokerage account if you want to like offset one position here with that one there, because obviously between the two, you're not going to be able to share any sort of buying power. But I would be sure that you can execute before you put risk on that you could be stuck with if the system goes down, right? It makes sense. Be careful first here. Many times I've lost money, and thinking back on it, I've been like, wow, I wish I just hadn't played at that moment, because, not losing money can be the greatest trade in the world at times, is what I'm saying. And so if you don't feel confident in your ability to execute based on the fact that you don't have a backup if Thinkorswim goes down, then I would not have risk on, period. And thanks for bringing that up, Viviano, because, it's been frustrating the last couple of days having Thinkorswim down. And I was able to pull up the web-based application. Let's take a look at that real quick here. And it works okay. It's not the same, though. I mean, it doesn't, I'm not as familiar with it. It doesn't, it doesn't work exactly the same way. I'm not as familiar with it. And so it took me a while to kind of get set up with it. So I would familiarize yourself with these other products if you have them. I also have Tastyworks, but I don't have money in that account. So it would take me funding the account, then it would take a couple days to get going. So for me at the moment, I have stuff in Fidelity, but that's kind of separate. I have stuff in Morgan Stanley, but that's kind of separate. So for me, if Thinkorswim doesn't work, as far as dispositions that I have for the YouTube thing, I can't trade. And so last couple of days when it was down, I purposely didn't trade because I wasn't confident in my ability to execute on that. And the new platform that's online, web-based, I'm not so fast at. And, that can be a huge disadvantage when stuff starts moving all over the place. So make sure you have a backup plan. You're confident with being able to execute in it. And I'm going to leave you for the market open today. Best of luck. This is a situation which is going to come to a head here very soon with the VIX and volatility. You heard it here first on Short Vol Show Live. I'll talk to you soon.
You're watching Famous Dave.
Good luck.